Hey savvy investors, today's title might have caught some of you by surprise, especially those who know me as a longtime supporter of Frasers Centrepoint Trust, or FCT. Now, let me be clear from the start, I'm not giving up on FCT just yet. I still believe in its strong fundamentals and resilience as a key suburban retail REIT. However, I've noticed many of you have expressed concerns in the comments, especially after my recent video on the potential impact of the Johor Bahru Singapore RTS Link on suburban malls like Causeway Point. Some of you are worried that this new cross-border connection might draw shoppers away from our local malls and impact tenant sales and rental income in the long run. With these concerns in mind, I wanted to explore some alternatives that are less likely to be affected by the cross-border shopping competition. So, think of this video as me thinking ahead, considering what I'd do if the RTS impact on FCT turned out to be larger than expected. I'll be sharing some retail REITs that could nevertheless offer more stability for those who want to safeguard their portfolios against the potential shifts in retail demand. If you're curious about where to look beyond FCT, make sure to like the video and subscribe to the channel, so you don't miss out on future updates. Now, let's dive into these alternatives. RTS Link impact on suburban retail malls. So, let's start with the potential impact of the RTS Link on suburban malls. When this new connection opens in 2027, it'll take just about 15 minutes for Singaporeans to get to Johor Bahru. With the favorable exchange rate, cost-conscious shoppers can find food, shopping, and even services at a fraction of what it costs here in Singapore. Analysts estimate that the RTS Link could result in a leakage of Singapore's retail spending amounting to about 2 billion Singapore dollars potentially shifting across the border. For suburban malls, where shoppers are often more price-sensitive, this is a real risk. Lower foot traffic and weaker tenant sales could translate to reduced rental yields and higher vacancy rates as some retailers struggle to justify their presence in these malls. Enter prime Orchard Road malls. Why they are different. In contrast to suburban shopping centers, Orchard Road's prime shopping spaces offer a level of resilience that could help them weather the RTS impact. Let's break down the reasons why. 1. Tourism-driven demand. Orchard Road is a major shopping destination for tourists. In 2023, Singapore saw around 14 million visitors, and a significant portion of their retail spending was centered around Orchard Road. During peak seasons, like the Christmas light-up, foot traffic on Orchard can soar to over 4.5 million visitors. This heavy tourist presence means Orchard Road's customer base is less affected by the RTS Link, as these shoppers aren't likely to head to Johor just for deals. 2. Stable vacancy and rental rates. Vacancy rates on Orchard Road are relatively low comparable to suburban malls. For example, as of Q3 2024, vacancy on Orchard hovered around 7%, close to the island-wide vacancy rate of 6.5%. Prime rental rates remain stable, even seeing slight growth of 0.5% to around 23 Singapore dollars and 10 cents per square foot. This reflects the strong tourism numbers in Singapore for the year. 3. Distinct shopping experience. Orchard Road offers a premium shopping experience that's hard to replicate. We're talking about flagship stores, luxury brands, and high-end entertainment that Johor Bahru's malls can't easily match. The area caters to more affluent and ADA's locals and high-spending tourists who aren't as affected by currency-driven cost savings. For these consumers, it's the exclusive retail experience that matters more than price, adding another layer of resilience for Orchard Road's malls. Prime retail REITs to consider. If you're looking to invest in retail spaces that are likely to be more resilient to the pricing pressure suburban malls might face from the RTS Link, here are some REITs focused on prime retail properties along Orchard Road. These REITs cater to a high-spending consumer base, including tourists and affluent locals, making them less vulnerable to shifts in local price-sensitive shopping behavior. 1. Lendlease Global Commercial REIT, or LREIT. LREIT owns 313 at Somerset, a well-situated property along Orchard Road known for attracting younger, experience-driven shoppers. Located in a vibrant part of Orchard Road, Somerset benefits from steady foot traffic and a strong appeal to lifestyle-conscious consumers. LREIT's portfolio also includes Sky Complex in Milan, providing some international diversification. While its Singapore presence isn't as extensive as some other REITs, LREIT's focus on Somerset makes it a solid choice for investors specifically interested in Orchard Road's retail potential. 2. Paragon REIT. Paragon REIT's flagship property, Paragon Shopping Centre, is a cornerstone of Orchard Road's luxury retail scene. Known for its high-end brands and premium shopping experience, Paragon attracts both affluent locals and a steady flow of tourists. With the ongoing recovery in tourism, Paragon is well positioned to benefit from increasing visitor numbers, providing resilience in rental income and tenant demand that suburban malls may lack. 3. Star Hill Global REIT. Star Hill Global REIT owns two prominent properties on Orchard Road, Wisma Atria and Ngee City. These malls host a mix of luxury and mid-tier brands and enjoy high footfall due to their prime locations. Star Hill's properties are strategically positioned to capture both local and tourist spending, making the REIT less susceptible to cross-border price competition. Its focus on Orchard Road's prime locations allows it to leverage the unique strengths of Singapore's premier shopping district. 4. CapitaLand Integrated Commercial Trust. Now, some of you might be considering CapitaLand Integrated Commercial Trust because of its recent acquisition of a 50% stake in ION Orchard. One of the crown jewels on Orchard Road, CapitaLand Integrated Commercial Trust also owns other prime retail properties like Plaza Singapura and Raffles City, which benefit from high footfall central locations. However, it's worth noting that CapitaLand Integrated Commercial Trust has a mixed portfolio that includes a significant number of suburban retail properties, such as Junction 8 and Tampines Mall. For investors particularly concerned about the potential impact of the RTS Link on suburban malls, CapitaLand Integrated Commercial Trust may not be the pure Orchard Road play you're looking for. While its blend of suburban and prime assets offers diversification, it may expose the REIT to some of the risks associated with suburban retail that we're trying to mitigate in this video. The Dividend Uncle's Take. Here's my take on this whole situation. If you're worried about suburban malls taking a hit from the RTS Link, then these Orchard Road-focused REITs could be worth a closer look. They offer a unique buffer against cross-border shopping trends thanks to their affluent customer base and strong tourist demand. Of course, no investment is without risks. Prime Orchard Road REITs might offer stability, but they're also more exposed to factors like global tourism trends and luxury consumer spending patterns. That said, for long-term investors looking for defensive retail exposure, these prime retail REITs offer a compelling alternative to suburban malls. To sum it up, while the RTS Link may draw some spending away from Singapore's suburban malls, Orchard Road's prime retail spaces present a defensive option in the retail sector. For investors seeking stable returns, REITs with Orchard Road exposure could be a smart move, thanks to tourism-driven demand, low vacancy rates, and premium consumer demographics. Orchard Road's premium malls aren't just shopping spaces, they're lifestyle destinations. And that's a unique advantage that suburban malls may struggle to match in the face of cross-border competition. So, if you're thinking about adjusting your retail REIT portfolio in light of the RTS, these Orchard Road-focused REITs might be worth adding to your watch list. As always, stay sharp, stay informed, and happy investing.